Senator Reed.
Oh, thank you very much, Mr. Chairman, and thank you, Chairman Powell, not only for your testimony, but for your innovative and I think very thoughtful leadership, and also for your personal integrity and decency. So thank you very much for that. If state and local governments are not able to provide essential services, what impact will this have on the economy? And without additional resources from the federal government, how will they be able to provide these adequate services?
State and local governments do provide a lot of the critical services that people rely on day to day: police, fire, public safety, all of the things that they deal with day to day that the government does tend to be provided for the most part by state and local governments. And essentially all the states have a balanced budget requirement. So what you see when revenues turn down and expenses turn up, as they have, is you see layoffs. State and local governments amount to something like 13% of the labor force. They're one of the largest employers. So it can really weigh on the economy. If the states are in tight financial straits, very tight, what happens is, first of all, they will cut essential services. Secondly, they'll lay people off, and all of that will weigh on the economy.
So essentially, that could be the biggest drag on the economy going forward, the states being forced by their constitutions to contract, literally. That's a view that's a fair view?
It can be a drag, and in fact, it was after the global financial crisis and during the Great Recession for a number of years. It's pretty well documented now that it was a drag on growth.
Now, one of the other issues, and Senator Brown has just echoed this, is that looking at statistics, 14% of state and local employees are African Americans. That's compared to 11.7% in the private workforce. So once again, we'll see a situation institutionally, maybe not intentionally, institutionally, that probably the bulk or a significant portion of this distress will be laid on the shoulders of African American workers, because they're the state workers that will be laid off. Is that adequate or accurate, I should say?
I don't know the exact number, but it's certainly right. And of course, we know from that people who have lost their jobs so far in the private sector come from parts of the service industry that are directly affected by coronavirus, and they're heavily lower income people. Minorities are overrepresented, women are overrepresented.
Well, let me turn to the May jobs report. I mean, it was encouraging, but did it represent that a turning of the corner, that the labor market's fine, that we're going to go forward? I think your previous comments suggested that's encouraging news, but going forward, still significant unemployment figures will be confronting us for years, perhaps. Is that accurate?
Yeah, so look, it was definitely good news, and maybe the biggest data surprise that anybody can remember. People thought it would be. They were looking at the claims data and other things. But the larger context, though, as you point out, is something like close to 25 million people have been displaced in the workforce, either partially or through unemployment. And so we have a long road ahead of us to get those people back to work. It's really a good thing that we're starting. We're starting earlier than we thought. That's nothing but a positive thing, but we just have to just acknowledge that it's a lot of people, and as I've mentioned earlier, there is a broad expectation that we'll see big numbers of people coming back this summer, and we certainly hope that turns out to be right. But also that those people who work in those service industries that are going to take longer to recover, there'll be a lot of them, and they're going to need, they'll find it hard to get back to work as quickly as the others.
One of my concerns, in having served through we thought then, Great Recession of 2008, 9, and 10, is that unemployment rates will stay high, and our unemployment extended benefits will expire. And in fact, what happens is, in different areas of the country, they will lag. And so you could have states that have very high unemployment rates. The point of my comments are, we do need, in your view, to have extended unemployment benefits much greater than the present law allows. And also, would it make sense to index those benefits to a certain unemployment rate, so that we don't find certain states or certain areas who are well behind, and they lose their benefits.
So I think there are going to be a large number of people who will not be able to immediately go back to work at their old job or even in their old industry. There'll be a significant group that's left over even after we get the employment bounce. And the details of this are entirely a matter of fiscal policy, and there are a lot of really interesting ideas bouncing around about how to do that. But I do think, they'll be hard pressed to find work, and they're going to need support. They'll have regular way state unemployment insurance for a period, but that's something I would be looking at: is what kind of support will they need, and also really are there some of them are going to need to find new paths through the economy? Are there ways we can help them do that?
Thank you, Mr. Chairman. Thank you, Chairman Crable.
Thank you, Senator Toomey.